Welcome to Dinar Shift, the news channel dedicated to bringing you the most accurate and up-to-the-minute developments from the world of Iraqi currency. What you are about to hear is a monumental development, one that many observers, analysts, and investors have been anticipating for years, often with a healthy dose of skepticism. Yet, today the unbelievable has become the undeniable truth. Iraq's currency revaluation, the process of adjusting the dinar's official exchange rate to a value that more accurately reflects the nation's economic strength, has officially entered its public implementation phase. This is not a drill, not a prediction, and not simply another wave of unconfirmed rumors. It is a verifiable financial event unfolding across the globe, with the Central Bank of Iraq leading the charge. This unprecedented clarity and confidence surrounding the event are what make this news so profoundly significant. We are witnessing the culmination of years of meticulous planning, international consultation, and deep internal government collaboration, and the financial world is holding its breath. The foundational action that sets this historic shift in motion is the formal activation of the new exchange rate by the Central Bank of Iraq (CBI). This single, decisive step is the result of a protracted, complex process involving countless hours of detailed planning and coordination among the CBI, the Ministry of Finance, and various other Iraqi government entities. The central bank's official statements have clearly articulated that this monetary adjustment is specifically engineered to stabilize the dinar, strengthen its position, and, most importantly, correct its valuation to align with Iraq's true economic footing. For those who have maintained a long-term interest in the dinar, this transition is far more than a simple numerical change. It represents a comprehensive structural correction that addresses decades of misalignment. This national-level effort ensures that every corner of Iraq's financial infrastructure, from domestic commercial banks to the systems processing government payrolls and public financial services, is synchronized and updated to operate at the new, corrected rate, marking a scope of change unseen in years, while the final, public international exchange rate, the one visible on global forex platforms, is still undergoing the process of global verification and release. The internal rates being used within Iraq are already pointing to a dramatic adjustment. Multiple verified sources from within the Iraqi financial landscape indicate that the dinar is now being internally calculated at a value substantially higher than its historical baseline. This move finally begins to rectify a long-standing economic anomaly where the dinar's official rate was kept artificially depressed, a residual effect of historical sanctions, past episodes of hyperinflation, and a financial system under reconstruction. The economic rationale for this is robust for years. Leading Iraqi economists have maintained that the dinar's trading value failed to recognize the nation's substantial wealth, particularly its vast oil reserves and burgeoning foreign currency holdings. If the internal rates currently being rolled out maintain their trajectory and successfully integrate with the international market, this revaluation could easily stand as one of the most substantial currency corrections in contemporary financial history. The crucial question for many is, why now? Why did the Iraqi government choose this precise moment to execute a rate adjustment that has been long anticipated? The answer lies in a prolonged, discreet, and intensely scrutinized process of meeting international financial benchmarks. Iraq has worked hand in glove with major global financial institutions, agreeing to and executing a series of monetary and fiscal reforms necessary to qualify for a stable, internationally respected exchange rate. This comprehensive preparatory phase included a fundamental restructuring of the national budget, precise recalculation of oil revenues to better project national income, and rigorous preparation of the financial systems for seamless international integration. Only once these critical prerequisites were fully met and certified did the central bank receive the green light from its partners to implement the revaluation. This methodical, evidence-based approach guarantees that the entire process is not merely legitimate in theory, but also sustainable in practice, effectively tying the new dinar value directly to solid economic realities and, in doing so, restoring both domestic and international confidence. To fully grasp the magnitude of this rate adjustment, it is helpful to simplify the long-term situation. For an extended period, The dinar's value was deliberately suppressed in comparison to global benchmarks like the US dollar. This created a profound economic distortion. Iraq's currency did not accurately represent its underlying economic potential. The low rate was a systemic issue, negatively impacting everything from complex international trade contracts to the calculation of government spending, from the ordinary citizen's local purchasing power to the viability of attracting private foreign investment. By making the necessary adjustments to arrive at a more equitable and realistic exchange rate, Iraq is taking a definitive step toward restoring its national economic equilibrium. Practically, this change empowers the Iraqi government to settle international trade contracts using its own currency, allows domestic businesses to establish more accurate pricing models, and offers the potential for citizens to experience a tangible increase in their money's effective purchasing power. Fundamentally, this is a strategic move to rebuild trust in the national economy and forge a stable, long-term financial foundation. On the ground inside Iraq, the physical evidence of this revaluation is becoming increasingly apparent. Domestic banks have already begun the painstaking process of integrating the new internal exchange rates into their daily operations. Throughout the country, automated teller machines, ATMs, have undergone temporary adjustments and recalibrations to effectively handle the updated currency values and denominations. Furthermore, the large-scale payroll systems responsible for compensating millions of government employees are being meticulously reprogrammed to reflect the new rate structure, and businesses across various sectors are actively preparing for updated pricing models for their goods and services. These aren't subtle hints, they are the concrete, undeniable signals that the monetary correction is an active process. Iraqi citizens are noting the flurry of changes, from official notices displayed in bank lobbies to communications from government ministries. The domestic online and social media landscape is vibrant with a mixture of excitement and a renewed sense of national optimism as the population begins to understand the potential ramifications of a strengthened national currency for their daily lives and the country's collective economic future. For the segment of the global audience who have been closely following the dinar for years, the investors and long-term holders, the immediate priority is simple strategic patience. While the internal rate adjustments are underway, the critical steps of official public release and complete global synchronization are still in progress. The advice from seasoned financial observers during this phase is uniform and straightforward. All currency holdings should be meticulously organized, their authenticity verified, and safely secured. It is crucial to ensure that all personal identification and bank account details are current and that any relevant documentation concerning the origin of funds is readily available. The prevailing consensus is to wait for the new exchange rate to be officially published on major international foreign exchange forex platforms before initiating any exchange transactions. This measured approach guarantees that any moves are legitimate, fully secure, and compliant with the stringent standards of international banking and regulatory bodies, effectively minimizing the risk of unnecessary complications. The next critical phase following the domestic adjustments is the process of international recognition and verification. After the Central Bank of Iraq has successfully implemented its internal changes, the new rate must be formally acknowledged and integrated by the world's leading financial institutions. This involves a rigorous verification process by major international banks, the integration into global forex trading systems, and formal acceptance across large international trade networks. This synchronization is not a formality, it is absolutely vital. It is the step that makes the dinar a globally tradable currency, ensuring that transactions conducted in Iraq's national currency can be executed with full confidence and without friction in any major market worldwide. The global visibility of this new rate is the ultimate benchmark, the final seal of approval that makes the revaluation fully effective. Until this landmark is reached, the internal rates, while a powerful indicator, do not yet possess the status of fully recognized international value. The broader macroeconomic implications of the dinar revaluation extend far beyond the direct interests of currency holders. By restoring a realistic and defensible value to its currency, Iraq fundamentally alters its financial leverage on the world stage. The nation gains the unprecedented ability to settle import contracts, service international debt obligations, and, most significantly, price its oil exports using its own currency, dramatically reducing its historical reliance on the US dollar for international transactions. This strategic pivot grants Iraq a higher degree of control over its national finances and begins to strategically diminish its dependency on foreign currencies. Leading economists project that the full implementation of the new rate will likely spur a significant increase in foreign direct investment, cement stronger and more equitable trade relationships, and ultimately improve Iraq's overall national financial stability. This revaluation is thus not merely about the currency, it is a profound declaration of economic sovereignty and a strategic repositioning within the global market structure. Furthermore, analysts are observing this move within a broader context of potential global currency shifts. Iraq's decisive action is seen by some as a potential catalyst, suggesting that other nations in emerging markets, possibly including countries like Vietnam, may be poised to execute their own currency adjustments. Historically, large, coordinated currency revaluations have often been interconnected, forming part of wider, concerted efforts toward international financial and monetary reform. Should similar adjustments begin to ripple through emerging markets in the Middle East and Asia, it would underscore that Iraq's revaluation is not an isolated, singular event but rather a significant component of a much larger, global wave of modernization in banking practices, trade frameworks, and the overall operation of international finance. This interconnectedness is a key element that elevates the dinar's adjustment from a national event to a development with global ramifications. For those actively holding the currency, the current focus must be on practical, protective steps. It is paramount to remain consistently and accurately informed about the official public release of the new rate. Maintaining a close and active relationship with banks that specialize in foreign currency services is advised. A physical inventory of all currency holdings should be clean, well-organized, and backed by detailed records for verification purposes, a step crucial for legitimacy. Additionally, it is prudent to consult with qualified financial and tax advisors regarding the potential tax consequences, as currency exchange events are often subject to taxation in various jurisdictions globally. By adopting a calm, strategic, and meticulous approach, investors can strategically position themselves to capitalize on the opportunities presented by this historic event while expertly navigating and avoiding the common pitfalls associated with sudden financial shifts. On a national level, the tangible impact of the revaluation is already generating waves of positive sentiment and early economic activity. Local media channels are reporting a noticeable upsurge in confidence among Iraqi citizens, with businesses tentatively beginning to update their price lists and individuals observing a potential increase in the effective worth of their bank deposits. This psychological and cultural impact is arguably as significant as the financial one, serving as a powerful demonstration that a currency revaluation is not confined to high-level trade negotiations and investment reports, but directly touches and improves everyday life. For the Iraqi populace, the symbol of a stronger, more valued dinar embodies a renewed sense of hope, a powerful stride toward economic independence, and a clear, measurable improvement in the nation's financial standing and future outlook. From the perspective of global markets, the response is one of heightened alert and focused monitoring. Major international banks and institutional investors are keenly watching the process, as the recalculation of existing contracts, the adjustment of import pricing, and the structure of future oil deals are all directly tied to the new dinar value. Any substantial currency correction, by its very nature, generates ripple effects within foreign exchange markets, and these effects could potentially influence investors and traders across continents. Financial analysts and global traders are dedicating significant resources to tracking these developments, fully aware that the Iraqi dinar revaluation is poised to become one of the most closely studied and observed financial events of the current decade, offering valuable insights into how strategic financial decisions can rapidly reconfigure regional and global economic dynamics. It is important for all observers to understand that the impetus behind this revaluation is not rooted in speculation or market manipulation. It is a fundamental economic correction. The newly adjusted value of the dinar is now aligned to reflect Iraq's verified oil production capacity, its current foreign reserve holdings, and its overall national financial strength. For decades, the official published currency rate simply did not correlate with these solid economic indicators. Today's revaluation is the necessary action to bring the currency value into alignment with verifiable economic reality, a critical prerequisite for successfully attracting large-scale foreign investment and for successfully building enduring trust and credibility in Iraq's financial systems. When a national currency accurately and transparently reflects a nation's true economic power, the benefits cascade across all segments of society, equally benefiting investors, domestic businesses, and everyday citizens. As the revaluation process continues its methodical advance, the final sequence of steps involves a definitive synchronization with major international banking and financial networks, including platforms like SWIFT and the major global forex trading systems, as well as foreign financial institutions. These integration steps are absolutely crucial for establishing the dinar's global credibility, ensuring adequate liquidity, and securing its tradability across international markets. Once this synchronization is complete, the dinar will become fully tradable on a worldwide basis. This specific milestone is the point at which all investors will observe the full and final impact within their own accounts, and the dinar will officially and unequivocally regain its rightful recognition as a legitimate, stable, and respected global currency. This moment will mark the end of one era and the confident beginning of a new one. It is also vital to recognize the proactive measures the Central Bank of Iraq has implemented to ensure stability. This revaluation has been meticulously coordinated with a set of long-term monetary policy reforms encompassing measures specifically designed to mitigate the risk of inflation spikes, ensure stable liquidity throughout the transition, and establish robust, adaptable systems for ongoing, professional currency management. By deliberately adopting this controlled and methodical execution, Iraq is actively minimizing potential financial risks while maximizing the sustainable economic gains for its citizens and its global investors. This strategic foresight is why many independent financial experts are increasingly characterizing this as one of the most thoroughly planned and competently executed currency revaluations witnessed in recent financial history, providing a potential template for other emerging nations. For those who are just now tuning into the dinar narrative, this moment is truly historic. After decades marred by prolonged anticipation, persistent rumors, and deep-seated uncertainty, the Iraqi currency is finally undergoing the necessary correction to fully reflect its legitimate economic worth. Crucially, the process has been deliberately slow, methodical, and carefully structured with the primary objective of preventing any form of market or economic instability. From an investment standpoint, this is not a random speculation but a calculated and verified financial event underpinned by fundamental, verified economic reforms, formal government approvals, and impending international recognition. It is a decisive turning point, not only for the nation of Iraq, but for every individual who has remained involved in the dinar market, signifying the move from potential to reality. The immediate 48 to 72 hours following this announcement are considered a critical window. During this intense period, banks within Iraq will be finalizing their comprehensive internal adjustments, international platforms will begin the synchronization process, and the first official, authoritative announcements regarding global recognition are widely expected. Currency holders must monitor these developments with meticulous attention and, crucially, resist the urge to make any premature exchange decisions. Patience combined with strategic, informed action during this narrow window is absolutely essential to fully realize the benefits of the revaluation while concurrently minimizing any unnecessary risk. This is the final countdown phase before the Iraqi dinar achieves full, unequivocal visibility and tradability on the highly competitive global financial stage, bringing an end to the long period of waiting. In conclusion, the Iraqi dinar revaluation is a confirmed reality, no longer relegated to the realm of speculation or future possibility. The internal rate updates are actively underway, banks are deep in the process of recalibration, and Iraqi citizens are observing the initial tangible effects of a strengthened currency. the official global release of the rate is now imminent, and investors must be fully prepared to act decisively and intelligently once the rate is publicly visible and verifiable on international platforms. This convergence of fundamental financial history, deep-seated economic reform, and the re-emergence of national economic pride marks a powerful global event. Those who remain informed, exercise strategic patience, and approach the next steps with clear-headed strategy are the ones who are best positioned to benefit most significantly from this historic financial development. The bottom line is this: the Iraqi dinar revaluation is a real, confirmed process unfolding right now. If you hold the dinar, maintain your calm, stay focused on accurate information, and ensure every piece of your currency is organized and verified. Do not initiate any exchange transactions until the official international rate has been formally released and authenticated. This is a truly unique financial moment, and wise, measured action is just as vital as the years of patient holding.